Hello, everyone, and welcome to the HASHR8 podcast. I am the Bitcoin Broski, and I've got a very special guest here with me today. This is a gentleman that I connected with a while back. He actually had some very public news come out about a deal that he'd done with Blockware Solutions, and Matt D'Souza, who has been on the show and is a good friend of HASHR8. And I'm glad that I finally get to speak with Trevor because he's got a lot going on in the mining space, and I think he's got a ton of value to add. So I'm excited for this conversation. Everyone, welcome to the show, Trevor Smyth from Arctoss Capital. Trevor, how you doing?
Good. Thanks for having me. HASHR8 podcast has quickly skyrocketed to the top of my must-listen to list on the podcast app. So definitely looking forward to chatting with you.
You're too kind, man. You're too kind. So you mentioned before we got on the show that you used to play hockey? Like that's
yeah.
Awesome.
From Canada. So of course grew up playing hockey, and that's what originally brought me down to the US as well. Played mostly sat on the bench, but played a little bit in college as well.
Gotcha. Awesome, man. Which position?
I was a winger.
All right.
Yeah.
Fast and scoring goals, huh?
Tried to.
There you go. Well, I know a good friend of mine, his name is Chris Leone. He played hockey for a really long time, and he recently retired from semi-pro and is now full-time in crypto. So I'm a fan, but I'm not a hockey player. I do live in Latvia right now though. So everyone here, it was a national tragedy when hockey stopped here this past season. You know, it's crazy.
Yeah, for sure.
Yeah. So anyways, not to get too far off track, I can go down a rabbit hole on just about anything, but I really wanted to have you on to talk about a lot of the services that Arctoss is providing the mining community. And, first and foremost, you had that press release about Blockware Solutions that you guys had done a deal with them. And why don't we talk a little bit about that? So what exactly did you guys do for Blockware that was so noteworthy?
Yeah, for sure. And just one point of clarification on that, the deal that we did was technically with the Blockware Mining entity.
Correct.
So Matt's got a couple of different businesses going. So Blockware Mining is a self-mining business. So what we did with them was structured a sale and leaseback facility. So they had just acquired a bunch of Bitmain S17 Plus rigs. They had them up and hashing, but we're looking for some working capital so they could go out and purchase additional equipment. So what we did was go in and the way the sale and leaseback structure works is we technically buy the equipment and then immediately enter into a lease transaction where Blockware repurchases the equipment from us over a 12-month period, but they get a bunch of capital up front. Miners can use that for any purpose. Oftentimes it is to go out and acquire additional machines so that they can get those up and hashing as quickly as possible.
Yeah, that makes a ton of sense. So I would assume that the attention picked up after that. How has business been with regards to that? Have there been more interested in doing such things?
Yeah, it's certainly been busy. We've had a ton of inbound interest. So we're just trying to line up as much capital as we can ourselves so that we can fund a bunch of these deals because there are some really attractive opportunities. So we certainly are stringent when we look at the type of mining company we're going to work with. We typically work with larger firms who do have a track record and have been up and hashing and generating profit for a couple of years in most cases. They have very low cost of power, so we are pretty picky in who we work with. But there's certainly a lot of opportunity out there, and if I forecast over the next 2 to 3 years. There's likely going to be $1 billion or more worth of mining rigs purchased in the North American market. And it makes a ton of sense for these to be financed with different types of debt offerings.
Sure. Yeah. I mean, those debt offerings would be available in just about any other industry, right? So it only makes sense to have that in crypto as well.
Exactly. It doesn't make sense for a lot of these businesses to continue to raise equity and dilute themselves when you really can model out pretty predictably what at least a certain level of profitability off the machines are if you're connected to a low source of power and have that operating experience.
So Trevor, how did you get into crypto? I mean, were you after hockey, did you mine yourself, or what was the gateway that brought you into the industry?
No, like most people, I wish I got into it a little bit earlier than I did.
Sure.
But
okay.
After the hockey career ended, I moved out to San Francisco in 2014 and started working just for some venture-backed technology companies. Some of the developers that worked at one of the companies I was at were pretty into Bitcoin. So I ended up falling down the rabbit hole myself in 2016 and started to accumulate, my own position in Bitcoin, not through mining, just through buying it at that time, but just was hooked on the industry. I studied economics in college, so kind of the combination of technology and monetary policy really had me fascinated. So as I spent more and more time learning about Bitcoin and some of the other digital asset industry that was emerging, started having conversations actually with my father, Randy, who's located in Calgary, Alberta, where I grew up, which I think is going to be an important place for mining if we forecast out a couple of years. And his background was all in asset-based lending and specifically in industrial equipment finance. So he provided leasing to companies in traditional asset classes. So you can think anything from a tractor trailer to an excavator to a dozer or forestry or oil and gas equipment.
Sure.
So we started having a lot of conversations about how the credit lending markets were going to evolve around Bitcoin. So we originally got started in 2018 with a smaller pool of capital, and initially we're funding Bitcoin-backed loans. I think we were one of the first groups to be doing that in North America. So we actually funded some of the earliest loans with partners like BlockFi and Unchained Capital, continue to deploy some capital with those firms, as well as drawbridge lending and Ledin, a Canadian firm. So we'll go in and provide the Canadian dollars or the US dollars to help them grow their loan book that they're originating. So that's how we initially got into it, but we always had this leasing and equipment finance idea in the back of our mind, and have recently started to spend some more time focusing on that.
It's funny you mentioned Calgary. A great city, by the way. It's like a hidden gem, but you're absolutely right. I think that there's going to be a huge center of mining in that area, right? Mm-hmm. That's just, I mean, with the oil fields that are there and all the trapped gas that's there, it's ripe for someone to come in. I know Steve Barber with Upstream Data is working really hard to get as many of his own miners deployed as he can. Yeah. But yeah, it's gonna be interesting to see what happens in that area over the next few years.
Yeah, there's certainly a lot of opportunity around the natural gas space, of course, along with all the hydro mining and that kind of stuff that's going on.
So now, are you guys working with any of those? And I know you can't disclose the actual companies, but are you working with those businesses that are dealing with the trapped gas?
So we are not yet financing any of those mobile rigs. I think we will get to a point where we'll be able to do that at some point. Just a matter of limited bandwidth right now, given There is so much demand. But I'm certainly interested and think there's an opportunity to go in and just finance those full units that have a bunch of mining rigs in them and are being deployed on the natural gas field. So certainly interested in that.
Yeah, and I guess right now they don't really meet your criteria of being up and hashing for a couple of years. Most of them are, newer businesses that have been hashing for a year in most cases now. So definitely not anything like what you're doing. But once upon a time, I did small business lending, and I always remember like going through the financials for some of these companies before we would approve a loan, and it was just so many little details. The nuances there, determine whether or not a business gets the funding that they need. So when you're going through the financials for some of these mining companies, right, you're getting a peek into really the underlying infrastructure of Bitcoin. What are some of the factors that you're looking at as you're going through these reports or financial records that are, indicating to you whether something is a sound company to lend money to, or something that you have to pass on?
Yeah, so there's a bunch of factors, and each deal is a little bit customized at this point, but primarily we are providing the financing against the equipment itself. So that's the first criteria that we're looking at, is making sure that right now we're just providing leases against the kind of newer generation Bitmain or MicroBT equipment. That could expand at a later date, but that's where we're at right now. So nothing on the older S9s or anything like that, as obviously the equipment is depreciated down to a pretty low value. So first off, looking at the equipment and making sure that the miner has gotten an attractive purchase price as well. We do pull a full credit analysis on the business as well. So we're going to look at all the classic stuff, what their cash flow is, and their assets and liabilities. And that might adjust what type of interest rate we might charge or what type of advance rate we might provide them.
Sure.
So we're looking at all that stuff. We also take a look at, what other debt they might have on the books, so we can understand how that might affect payback on our lease and things like that.
Interesting. So, and I know we talked a little bit about this before the show started, but with the current delays in the equipment hardware or in the equipment coming out of China, how is that impacting things for you guys? I mean, can't put you in a position where you're looking at a lot of favorable loans at this point in time.
Yeah, I think it's a huge issue for North American miners right now, and hopefully it gets solved at some point with either one of the manufacturers from China opening up a distribution center or even a manufacturing facility in North America, or some type of new manufacturer coming on board. So that's what I'm hoping for. But it does definitely present challenges right now. We don't want to provide a bunch of capital up front to a company to buy new equipment that's not going to be delivered and generating revenue for 4 months. It puts us at risk, and it also puts the miner at risk because they're having to make lease payments back to us without actually being able to generate revenue. So they'd be relying on other revenue sources. So right now, a lot of the deals that we're looking at are for this sale and leaseback type structure, where the equipment maybe they ordered it a few months ago, it's just been delivered, and we'll go in and provide the financing as soon as it's been delivered. But as we get to a point that there's some shorter lead times, we can certainly look at more deals again for brand new equipment. We are also open to helping people acquire equipment off the secondary market. Again, depends on what the acquisition price is and that sort of thing. But that's something else that we can look at to solve that problem with miners right now.
But off of the secondary market, are you still only touching the newer gen equipment, like S17s, T17s and up?
Yeah, so it would have to be, an opportunistic situation. Maybe somebody, got a little bit over their skis and ordered too many S17 pluses,
Sure.
and they don't have their infrastructure set up to actually be using that equipment yet. So they're looking to unload 500 or 1,000 of them or something like that.
I wonder, like with all the new financial products, the price of Bitcoin isn't in a zone that most miners would consider advantageous right now. I think that, it should be higher to show better profits for the Bitcoin miners out there. However, it doesn't seem like there's a ton of capitulation. It doesn't seem like we're seeing, miners fall off the map at a pace that was previously predicted would occur if we stayed below $9,500 per Bitcoin in the past. I wonder if that's just because of the financial products that are available. I wonder if, products like Arctos, products like some of the other, CeFi and not so much the DeFi, but the CeFi products are helping people stay afloat that would otherwise go out of business.
It certainly could be a factor. It's hard to say for sure, but there are some good products out there. There's some hedging products out there. So that I know there's some miners using the derivatives markets, whether it's, taking advantage of a covered call program. Drawbridge is a partner of ours that provides something like that. And I know BitUda has done some OTC trades to help miners. So it certainly could be a factor. It also seems to me like there's just more sophisticated businesses and people in the mining game than there might have been a few years ago. So people who I think understand just how to handle cash flow and risk a little bit better as the industry kind of institutionalizes a little bit more.
Yeah, I think you're absolutely right. That's been a topic of conversation for a while now. Is just it's a nascent industry, and in the beginning you had people who, they weren't lucky. They were first movers, and I'm not a big fan of calling first movers lucky. They were in the right place at the right time. But maybe they didn't have the business acumen that some of the miners do now. Maybe they weren't, a fund manager before. Maybe they didn't have a financial background. They just had some computer servers and then ended up with, millions and millions of dollars. So now we're seeing that group come in that has more maturity. Maybe they're a little bit less tech savvy, but they have the financial acumen that they're able to understand these products and services are needed. So for me, it's always exciting. Like looking at everything that's being provided now, it indicates the maturity of the market, and it just lets you know that like there's staying power, right? You wouldn't have these kinds of products and services pop up if, there wasn't potential, long-term rewards for both ends of the deal. So
For
It's
sure.
exciting.
And the best teams are the ones that can kind of marry that tech background and expertise along with the financial and business acumen.
Absolutely. Absolutely. And that anymore, I think is most of them. There are very few that are just one or the other at this point in time. And there's a
Yeah.
lot of hosting facilities, and they tend to get the people who are, non-technical, but have the capital. But there seems to be a good, healthy mix. And I know we've mentioned Matt before, but Matt's a great example of that, right? Like
Mm-hmm.
Matt's got the chops on both sides of things. And I mean, it shows. So
Yeah,
there's a lot of people like him. So, Trevor, first of all, before we get too far away from this, man, happy birthday.
Thank you.
When I found that out today, I'm like, all right, he made time for the Hash Rate podcast on his birthday. That's a big thing.
Yeah,
I appreciate that, man.
Got to do it. No worries.
So, what is it that you see right now that you're excited about? I mean, you see all of the new products that are popping up, the miners everywhere. What's going through your head on a daily basis? What keeps you grinding?
I just think the opportunity is so vast with how the Bitcoin mining industry is going to evolve in North America. I think there's going to be a lot of capital inflow. I think there's going to be some pretty awesome facilities that are built out at scale that are like fully utilizing liquid cooling, have really low cost of power. They're doing some innovative things there. And I just think it helps to grow Bitcoin as an asset class. And I think like a lot of us in this industry just feel like it's a more fair money. So anything that we can do to support the growth of that is what keeps me excited. I'm also excited to help usher some more institutional type capital into the space. I know that's something that people talk about a lot, and for a lot of people when they're talking about it, they think it's going to be hedge funds just coming in and allocating to Bitcoin, and there certainly is going to be some of that. But we're also excited to bring on more and more bank debt. I think we're one of the first businesses in North America to start to do that. But bringing in bank debt and bringing in other types of private equity and stuff into these types of structured debt products that feed the Bitcoin industry. And if you look at other commodity industries like oil and gas and energy, there's sophisticated debt products, and that's how a lot of institutional investors participate, and because they're interested in the yield that can be generated off those assets.
Sure. So how's that interest been? Are you seeing an uptick? And I mean, do the banks care who they lend their money to an extent?
Yeah, well, most of them will, still not touch anything to do with this industry, but
Okay.
we are making progress. There's been news recently about Silvergate that's doing more and more stuff on the Bitcoin-backed loan stuff. We work with a great bank in the U.S. called the Provident Bank, who's quietly been building out some products for the digital asset industry. So we've been happy to work with them. Also, fortunately, Randy, through his other leasing and lending businesses, has been raising hundreds of millions through Canadian banks. So they're getting more and more comfortable, especially given their history and background in working with Randy, about providing some debt capital into this space. So we're making progress. There's not a huge amount of it flowing in yet, but you just need to spend the time and continue to educate those folks. And a lot of them are very willing to learn about the space. And we're at the point now that the compliance teams at some of the banks have kind of given the thumbs up. So now it's really just continuing to educate them about the risks and how we mitigate those risks in deploying capital into the asset class.
So for your guys' ideal clients, I mean, are they always facilities, or are there people that are coming to you and looking to finance hardware that's then going to be hosted?
Yeah,
how does it work?
Both. So
Okay.
we're still relatively early in this lease product, but we're certainly having conversations with a few large hosting facilities where we would kind of partner with them to offer financing to any of the companies that want to come in and host at that facility. As a lender, that actually provides us a lot of security because we know the hosting company, and if the miner were ever to default, we can just make one call to the hosting partner and say, hey, flip those Bitcoin rewards over to us because the miner's in default. So that provides us a lot of comfort. So that's certainly something that we're looking at building out over the next few months as well.
That would be a really valuable service. I imagine that's the big hiccup. The crazy thing for me has always been when it comes to buying hardware, it's 100% of the purchase price of the hardware that you're out of pocket for months.
Yeah.
And although deliveries are, I mean, look, people may hate on a lot of things about the ASIC manufacturers, but they do tend to deliver their shipments. They may be late. They may sometimes be not completely accurate, but they deliver. So it's mentally the challenge of sending, that much Bitcoin or that much USD to a foreign address or a foreign entity and just not knowing is that I can understand the trepidation that a lot of these institutions probably face.
Yeah, it's certainly an issue. But hopefully we'll have some new distributors based out of North America that, can build out some partnerships with those manufacturers or even a North American based manufacturer at some point, like we were chatting about earlier.
Yeah, it would be really interesting to see that. I mean, there's been some talk. I know SBI Crypto has something I think is in the works there. In a Telegram chat the other day, I had heard that someone had mentioned a new ASIC that would be coming out soon that's being tested now. There's definitely a demand, right? There's definitely a demand for a North American Bitcoin ASIC manufacturer to come on the scene and do something. It'd be great to see. To see. I don't know how they produce something in the States and make it cost competitive with what's being produced in Asia is the question.
Yeah, I'm not sure either. So only time will tell. It would certainly be interesting, but yeah, there's definitely going to be challenges. I think even if MicroBT or Bitmain were to set up a distribution center in North America, and even get towards a point maybe where you just need 50% down payment and then 50% at delivery or shipping date, even that would, I think, go a long way. And one, helping us underwrite more deals and get more capital out through the lease product, and also help just the miners with their cash flow as well.
Yeah. And, I think it's Harry Sudduck that brought this up. The ASIC manufacturers are the only people who get to price their equipment based on the market conditions,
Yeah,
it's crazy.
I heard him talking about that. I'm with you, Harry, on that one.
Right. That's nuts. It's nuts that they can set that. It's just an arbitrary number that can float with the price of Bitcoin. God bless them. They got it set up. They figured us all out, and they mine against most of the people. So not only are they making money on the sale of the machines, but they're competing for the block rewards.
Exactly.
It's nuts. So, Trevor, with Arctoss right now, you guys are, I know you got a lot that you're working on with this halt in equipment deliveries. Are you still seeing is there still growth on your radar in North America? Are you seeing a lot of miners continuing to deploy, or is it a wait and see for a lot of the facilities that are out there right now?
So we still certainly have a lot of growth in front of us. So we're working on multiple lease deals right now, just trying to figure out whether it's going to be a sale and leaseback or potentially a lease, maybe a little bit closer to the estimated delivery dates. But we certainly still have some deals that we're working on that front, and I think that's going to continue to grow pretty quickly. And once we get into the fall and the manufacturers have caught up a little bit, I think we'll start churning out a lot more of those deals again. But the lease product is just one of our products. So we continue to fund Bitcoin-backed loans with some of our lending platform partners as well. And there's an insane amount of demand in that space. I don't know what the total number worldwide is, but if you add in all the different platforms, there's certainly a lot of demand out there. So we'll continue to put capital towards those deals as well. What
are you making of all of this DeFi hype right now? Is this anything you guys are getting caught up in? Do you have an outside opinion?
We stay focused on the Bitcoin market.
All right, fair enough.
I'm credit to everybody working on some of the innovative stuff there. I think sometimes the builders in that space forget that you need to actually solve a problem for people instead of just creating cool tech. And there's also just still a lot of risks. There's been quite a few hacks and vulnerabilities. So I know there's even the one kind of DeFi Bitcoin backed loan product had some. They didn't get hacked, but had some vulnerabilities disclosed recently. So there's certainly a lot of risks. I know if I was a miner or a borrower, I would at this point certainly be going to an institutional lender who I could trust.
Well, I think even like the Ethereum DeFi community right now, that's been all the hype for the past couple of days. I'm not really sure it has any financing principles. I think it's mostly just like ICO 2.0, where it's basically just you're staking certain coins and you're making a yield off of it. They were calling it yield mining for a little while, but it was nuts. It's just, it's a number go up scheme.
The yield farming. Yeah. I mean, credit to all the funds and just individuals who have been able to trade that and make a ton of money. A
ton of money.
So credit to those guys, but like long term, I don't know that that's solving a problem for anybody. So I'm with you. It's good for the traders who are smart enough to capitalize on it. But other than that, I don't know where it's going.
Yeah. Well, who knows? Maybe it'll bring a new wave of retail interest for the Bitcoin community. It seems to me like all of these people who get in on the ICO hype or the new hype of the day end up just Bitcoiners. That tends to be the evolution. They start as shitcoiners and then they just transition over to Bitcoin once they realize that nothing else has any purpose. I know that was my story, but anyways.
outside of Bitcoin, the next most interesting thing to me is definitely just like the stablecoin crypto dollar platforms. There's some cool stuff going on with some of those projects, but other than that, mostly just try to stay focused on Bitcoin.
So when it comes to the stable coins, though, so let's walk down the path of a potential digital dollar, right? Like, do you really think that? I mean, so what do you view Bitcoin as? Store of value or medium of exchange?
I think right now the narrative of the store of value or digital gold, digital commodity is what I align most with. Okay.
But do you think that there ever will be a, one digital currency that's used, or nation states?
I think it's possible. It's possible. I don't know how likely it is. I don't know. I go back and forth. What do you think?
I mean, I see it eventually happening. I think that, China's DCEP is going to lead the way, and then other countries in Asia are going to institute their own. And, once the United States realizes that they don't have to spend money to print new dollars, they can just, allocate a bunch more new ERC20 tokens. They'll be happy. I think it's a natural evolution. It's not like anyone's going to be using cash in the next 10 years anyway. I think cash will be taken out of circulation. It's too tough to track,
Mm-hmm.
And the way that things are moving, and I can't speak to Canada, but definitely in the States and in a lot of parts of Europe, everything is tracked, mm-hmm. right? Your phone is tracked. How you spend your money is tracked. All of your information online is tracked. There's not going to be any moment of a person's day that isn't plugged into the system in some way, shape, or form, right? I think the real yield farming is just getting enough humans in one place and collecting as much data as you can,
Yeah, for sure.
Well, Trevor, as we wrap things up here, man, what I'd love is for you to let everyone know how they can find you, how they can get more information on Arctos, and all of that.
Sure. Yeah, I should be a little more active on Twitter, but our Twitter handle is @ArctosCap. You can certainly check out our website, arctos.capital. And for anybody looking for a lease or kind of customized loan facility, you can shoot an email to credit@arctos.capital, and certainly happy to chat with anybody and see if we can put something together that might help out.
Awesome. Well, Trevor, thank you so much for coming on the show today.
Thanks for having me on.
Absolutely. It was a blast. And to the listeners out there, thank you guys for continuing to tune into the HASH8 podcast. We appreciate your support. Stay tuned and make sure you're subscribed to the YouTube channel. We have a lot of new shows coming your way here in the next couple of weeks. So keep it locked, and we'll talk to you guys again very soon. Thanks for tuning into the HASH8 podcast. I hope you enjoyed this episode. If you did, please consider liking and sharing this episode with a friend. Also, remember to subscribe to our channel for more amazing content. And if you haven't already, I'd suggest you subscribe to HASH8's weekly email difficulty adjustment. It's a newsletter focused on the most important stories in Bitcoin, cryptocurrency, and mining, delivered right to your inbox each and every Wednesday morning. You don't want to miss that. Be sure to head down to the show's notes and and subscribe to Difficulty Adjustment Newsletter today. And remember, each week, HASH8 does a special giveaway for one subscriber to the newsletter. So by subscribing to Difficulty Adjustment Newsletter, you are registered for each week's giveaway. And for those of you who don't yet follow us on Twitter, I'd encourage you to do that. We are at HASH8. That's at H4SHR8. Thanks again, and we'll see you next episode.